Hey, hope everyone's doing great. Today is Thursday, the 16th. So, we'll start with the E-mini. I've been trading Forex for the most part, but I still frequently watch the E-mini just kind of for fun, and it's still a really great market. So, first and foremost, let's look at we had the big Fed report yesterday at 1 Central Time, 2 Eastern Time, and they found that the Fed finally hiked rates, the interest rates. While I'm looking at that, I actually have not looked at bonds, and I want to see that. Arguably, when I look at this strong bear breakout channel sideways for 20 bars, tried to get a breakout to the downside, but it's a trading range, so probably the breakout will fail, and right here it appears to be failing. So I think we will get back into this range, and this is a daily chart. Monthly chart, strong bear breakout, but it's consecutive sell climaxes. It's probably some sort of 50% pullback, which you can see it is right here. So probably enough for a second leg down. However, you've always got, where's the stop? The stop's up here. So, maybe give you an example, we could have a sell off and we could have a pullback all the way up to here and then a second leg down to here. We could have a small pullback and go all the way down here, but you can get a measured move down. No surprise, from this high to this close, it was reasonable to sell this bear bar. Stop up here, probably will get a measured move down of some sort. Takes you to the bottom of this channel. It's also a nested wedge, first push, second push, third push, or first push, second push, third. So there's two wedges right there that I just pointed out. One, two, three, and either one, two, three, or one, two, three, depending on how you draw it. Computers will see three pushes up, and that's all that matters. So the bears will look for 10 bars, two legs, along with the bulls. Back to the E-mini. So we have been rallying for quite some time. Monthly chart, consecutive buy climaxes, but still a fairly tight channel. Bears probably need a micro double top. Best looking bull bar in the past quite a few bars, so probably exhaustion and not a measuring gap. We go to a 60-minute chart. I really don't like session breaks. I'm going to get rid of them. So, strong rally, strong climactic move up. So it's basically a parabolic wedge, buy climax, and a sell off, spike and channel down. We tested the top of the channel maybe today or yesterday, the past few days up here. So we're in the realm of a trading range, big up, big down, big up. It's probably going to form some sort of a triangle, maybe a final flag. 5-minute chart. I'll just start with, if I get my days right, I'll start with 13th and just kind of having a little issue with that. Cannot use my blocking where my scroller is for TradeStation. So, anyways, I'll do the past few days, and then I'll look at Forex, maybe crude oil. So, here, wedge bottom, one, two, three, always in. It's always in short, but tight enough channel that you'll probably have to get a retest. So I would get out above this bar. Is it always in long? Maybe, but we never got above this high, so you've got to be thinking trading range, possible, high of the day and double top. So, bulls were long. Maybe I think they definitely get out below this bar, this close. They clearly gave up here. Maybe we're going to get a measured move down, something like that. Tight enough channel, first up will fail. Here, I think minor reversal. So okay to get out of longs. Maybe probably not three. It is three pushes, one, two, three, but this is strong enough for probably at least another leg down, and it may be a larger three pushes down, something like that. So bulls, bears probably get out of shorts. Aggressive bulls buy. I think bears probably get out below here. Certainly below here. This is probably a minor reversal, tight enough channel that you'll probably get a second leg down. It was also probably a 50% pullback, as you can see right here. 50% pullbacks are important simply because it's all technical. It's got prices searching for value. So think about it. If this is a strong move down, the bears know there's going to be a second leg. A few things happen. You have trap bears and trap bulls. You have bulls who have been buying all the way down here. Let's say they bought this low, for example. They're trapped, so they will use any sell off to buy more. And most importantly, they will use any bounce to exit their longs. And they'll exit around break even. And you can see, even if you bought the highest close of the day, and maybe you bought more here, you wouldn't have gotten out here, but if you would have held the rest of the day, you would have. You would have bought. Well, I don't want to get too in detail on that. I want to go back to 50%. 50%, it's equal risk reward. You sell here, stop up here, target down here. So you have a perfect one-to-one risk reward on a probably better than 60% bet. Bulls, so bears get out, bulls get in. Bears probably have to get short again, back to always in short. Strong breakout, bad follow through, probably a trading range. Bulls will buy above this bar and buy more above here. So, this is always an interesting situation. I'm going to try to speed this up a little bit. I really want to cover Forex. That's mainly what I'm trading. Three pushes down, probably a reasonable buy here, probably a reasonable buy here. So if a bull buys here and uses, let's say they risk maybe 4 points, or maybe some sort of, maybe a measured move down, better, or a measured move down over here. Sorry about that. So they buy above here, and you can see, they probably need to stop a few ticks below. So they buy above here, maybe they buy more above here or somewhere, and then they exit, the rest, possibly a break even. Strong enough breakout, probably just a little more up, probably will test here. May test all the way up here. And surprise, surprise, we did. We also, we tested these lows. But anyways, tight enough channel that I would not look for shorts, and I would just exit maybe below here. So bears get out. Do bulls get out above here? Well, they can. They don't have to. It's a micro channel. First level will probably fail. So they probably exit. They definitely, I'd get out above this bar. Certainly, I think they have to get out above here. And bulls go long. And again, open as a trading range over here, still always in long. Bull breakout of bull channel, so probably 60%, if not 70% chance we'll test the bottom of this channel line. But, it's forcing you to sell right at the line almost. So what I mean by that is bottom of the channel is right here. So if you sell here, stop up here, you barely get a one-to-one in the first place. So it's really not a good stop entry market. It's a limit order market, as you can see. Bulls bought this low, bought 1 point lower, 2 points lower, scalped out back at the original entry. And they did that all the time, So bulls buy down here, they sell new highs, scalp out, sell above, scalp out, buy below things, scalp out. So really not a great swing trading market. But, in terms of always in, it's really not. It's not that clear through here. It's a very tight channel. And, been rallying, so we'll probably test down. Probably test down on one of these lows. Tried to get a bear breakout and we failed. So maybe the first reasonable buy is above here, but if you do, you've got to get out probably below that bear bar. And then, maybe, I don't know, maybe you buy above that bar. But not a great swing trading market. always in over this day, so gap down. So you may be always in short. If I had to do anything, I would sell below this bar, but 4 bar type trading range, it's really not a great sell in the first place. Starting to get a lot of sideways. And you can see this is one of those moments where bears sold and they bought this low and they immediately got trapped. So look right over here for a minute. I didn't realize this the other day. So as you can see, it's reasonable to buy this low, but look what happened if you bought this low. Bulls bought this low right here and bought 1 point lower, and they got trapped. So you've got to be thinking, limit order bulls are getting trapped, and if they do, they may have to exit their longs. And the bulls dumped right here, so it's a micro channel down, strong enough breakout. Again, bad follow through, so probably need at least a micro double bottom, but it's basically a parabolic sell off. 1 push down, 2 pushes down, 3 pushes down. So I still think we're going to test up to this high, and I'd be more interested in buying down here than selling. So I would probably get out above the bar. And you can see it did not trigger. Now micro double bottom, I would definitely get out above this bar. And if you did, you have a low too short, but again, low too short, bottom of the range, consecutive sell climaxes 1, 2, 3. And usually 50% of the time you get an opening reversal, so I would not take this short. I'll miss it if something happens. Then you start to get this strong breakout, probably strong enough to make it always in long and at least second leg up. So bulls will probably buy. There you go. There's your second leg up. So again, it's hard to buy above here, but if you understand what's going on, let me back up for a minute. 3 pushes down, 1, 2, 3. Strong enough breakout, probably exhaustion. It's the best looking bear bar, but you'll probably get a second leg down. So, just because you get a low one short, you get a low, excuse me. I've got to kind of slow down for a minute. I'm having too many thoughts trying to explain this, but you can see we've got a low one short, consecutive sell climaxes. Again, I'll say it again, 1, 2, 3. It's basically a spike and channel. Bear breakout, a gap down spike. So first push, second push, third push, trying to break below this range, and we immediately got bad follow through. So I'd get out of shorts, and when you get something like this strong of a rally, you're probably always in short, and you have a lot of trap traders. So again, as I said, probably over here somewhere, you have bulls that are trapped that bought this low, and they'll scale in. They'll use any bounce to get out. You have bears who've sold down here. Maybe they sold this high. They're trapped. They'll use any pullback to take their profits. And that's exactly what they did. And you can see, look right here, 58 to 59. So bears sell 1 point higher, scalp out. Strong breakout, but big tail. Why do we get a big tail? Makes me think it's a bull leg in a trading range. And the bulls, surprise, surprise, the ones who were patient held made money if they bought this low and bought more lower. So, it sounds crazy, but the probability is probably so high. You buy this low, and you look at this and you say, you buy this low and you risk 10 points. I've heard of several people doing this kind of trades. I don't do this, but I still think it's a profitable strategy. You buy this low at 62 even, and you put a stop at 52 even, or 51.75, and you wait for a credible bull bar to buy. And maybe you buy above this bar, or maybe above here, and then you exit all right back at your first entry. It looks like a lot of traders did that, but you can see it would have worked, and you'd have been out right there. And that to me is a very fascinating. It works. Now, you've got to know when to get out. I would certainly not recommend anyone doing that on the Emini that's not already consistently profitable. I would not recommend anybody trading the Emini. First off, I want to back up with what I just said. I think people should trade Forex or the Spider starting out. they just have a much greater chance of making consistent money. Now, with that being said, I still think the Emini is a great market. But it's hard for most people to do proper risk management. So as you can see, always in long but consecutive buy climaxes here, here, and here. This looks like we're going to get a sell-off, and I do not think we'll get above this high. So I think bear selling up here will make money because that's, it's just higher probability. So, the same thing goes for bear selling down here. Maybe they sell this high, stop up here, and they sell more below here. I think they'll make money. And look what happened. It's just, that's how a trading range works. Maybe you sell below here and you sell more below a bear bar. Or let's say you sold this close even. You wait and you sell below this bar. Well, you made money. Or you at least get out of break even. So it's very important in a trading range not to buy high and not sell low. If we're going up for quite a few legs up and you look to the left and it's in a trading range, which most days are, do not, don't, you cannot be hopeful. You've got to be practical. You've got to understand what's going on. The market's probing support, trying to find value. And eventually it goes too far too fast and everyone stops buying, so the market has to race up to find sellers. And it did the same thing. It raced up more, and eventually there's no buyers. So it's got to crash back down to find sellers. And all of a sudden, look what happens. Where are the sellers? They're gone, and then price races back up. So it's trying to probe and it's trying to find value. Al talks a lot about that in his new course. That's the whole job of the market, though. You can see we formed a tight trading range in the day, kind of like a triangle. Always in long, channel bull breakout, bad follow through. We're at yesterday's high. Probably going to go sideways for a little bit. Always in. Maybe you buy above here, but maybe you probably get out below here. Not a great always in trade. And if you get out below here, do you get long above here? Well, you probably do. But again, I think it's kind of aggressive trading like that. Now, you get out above here. Well, it's technically a wedge. 1, 2, 3. Most reversal is 50-50 shot. You get an opening reversal, within the first hour. So I'd get out above it, and tight channel. And it just becomes hard. Maybe you buy above here, but again, I don't know. I think there's probably going to be sellers above, so it's probably some sort of a trading range. And I was wrong. So, this is one of those days the range is tight. It just kind of grinds up, and then you get trap bulls. But again, big tail. I still think we'll come down to here at some point. And then you get this 3-bar breakout, probably going at least a little higher. And then look what happened. 3 consecutive bear bars. So, that's a really big thing you have to think about is bull breakout, little bad follow. The bar couldn't close on its high. Then you get an inside bar. Then you get 3 or 4 dojis in a row. You really don't want to see that late in the move. It's probably exhaustion. So trying to form a double bottom with this low, probably, we'll see. Will you get a bear breakout or bull breakout? Well, I don't know. You may get a bear breakout. And then look what happened, the Fed bar. So clearly a strong breakout, probably going at least a measured move up of this body. Bad follow through, do you get out below? Maybe, but if you do, you got to get back in again. Do you get in above here? I would not. Then you buy again above here. 1, 2, almost 3 pushes up. So it's basically a nested 3 pushes up. Then we got a 4th, breakout above the wedge. So 1, 2, 3, bull breakout. I would definitely get out below the first bear bar here. Strong enough breakout, probably second leg down, but late in the day, I wouldn't do anything. There's your second leg. And again, going sideways, testing this low, fell below, probably forming a trading range, probably buyers down here. And then second entry buy, okay, swing buy, but, maybe put a stop here. Strong bull break, strong bear breakout. What do? Well, I think it's okay to get out, but if you get a bull bar closing up here, you got to get long again. And there you go. So, bulls probably have to get long again, but it didn't trigger. Probably will get back above this high. So, let me back up real quick because I'm not really talking about always in. You know, maybe you take that stop into short, but it's difficult. Probably sellers above, at least second leg down. If you buy here, you know, maybe you put your stop below, but otherwise, maybe you get out on this breakout. I think it's okay to do either, but it's still low probability. May test down here. So again, bulls probably buy somewhere in here, and then we test it up to just about that high. And this is kind of what's interesting. The bull that buys here, maybe they use the stop, something like that. Measure move down in this leg, or maybe something like that. They buy here, or maybe they just risk 10 points. Kind of like I said earlier, they buy here, buy more somewhere in here, maybe at this low, risking 10 points. They'll probably make money. It's a very high probability strategy because the risk is big. I'd get out below this bar. 3 pushes up, kind of a nested wedge, lower high, maybe a bear channel. Then theoretically, you got to get long again above this bar right here. But again, not so easy. And maybe you get out below it here. Definitely get out below there. Aggressive bear sell. And then you're at the bottom of the range, so if anything, I'd be buying down here. Probably won't get a successful bear breakout and went sideways into the day. All right, so I'll talk about crude oil real quick. By the way, I'm going to start making 2 videos, one over the Emini and futures markets and another over Forex markets. These videos will be way too long if I don't. I'm going to split these videos up so people can see differences. So, we've had an incredible sell-off a couple days back on the 8th of March. And you can see tight channel, strong bull breakout, but bad follow through, and then we just got an endless pullback. So somewhere in here, probability is a very high that you're going to measure move down. So bears sell, stop up here, and then we get a new breakout, stop up here, maybe up here, strong breakout, then we just channel down, and another strong breakout, probably stop up here. But at this point, clearly 3 pushes down, 1, 2, 3, very climactic, probably some sort of exhaustion gap. We've probably already had a measuring gap that takes you, we're already below a measuring gap. This is certainly some sort of, I'll just put the measuring gap in the middle. This is certainly some sort of spike on a higher time frame. Oops, kind of lost my place. There we go. Probably sideways for at least a few hours. So I would just get out. If I was still long, I'd get out. And we're trying to rally. Bars are getting tiny. And let's see right here. So price needs to get up to about something 40. Oh, interesting. Never quite got to it. But anyways, went sideways for a few bars. Strong bear breakout, probably, going at least a little lower. But that bull bar is a warning. So bears will sell. Some will exit down here. We went a little bit lower. But this bull bar is a warning telling traders that, hey, if they bought this close and they scale in lower, guess what? All is probably well. They'll probably make money. And look what happened. This tells traders that it's not the end of the world. And, number one, a few reasons. So, number one, I got to kind of zoom out. It's the best looking bear bar in this entire sell-off. So probably some sort of exhaustion gap. Second, terrible follow through. So bulls will probably buy this low and buy this close. Scaling lower, and look what happens. So they buy here, or they buy this low. They scale in, scalp out at their original entry, and make money. You can call it a head and shoulders bottom. So bear breakout to a lower low. So then a trend line break to a higher low. So you can call it a higher low major trend reversal. But again, probably minor, strong bull breakout. But even over here, strong rally, possible second leg trap, and then terrible follow through, starts to melt away. Probably will test back down to here. This is a 20 gap bar short on some time frame. Maybe a 15-minute chart, 30-minute chart, something. And then we probably just form a trading range. And yeah, you can see, look what happened. Most major trend reversals, bear trend line breaks, we can call it a double bottom. We call it a nested double bottom over here, and then another double bottom. They all lead to trading ranges. What else? I'll look at a 60-minute chart on this, be a little easier. Strong bear breakout, another strong breakout. Here's the double bottom I was talking about, kind of a double bottom. Micro double bottom, another double bottom. Try to get a measure move down. And it looks like we basically got there. Found buyers, surprise, surprise. Strong enough breakout, probably a second leg. This is exhaustion. Best look, 3-bar breakout. At this point, smart traders are for sure buying back shorts. So a lot of traders will buy here and possibly go long, and they'll buy aggressively, knowing that price will get up to here and maybe get a bull breakout. And that's that. So anyways, this concludes the Emini and futures markets for now. I will post a Forex review in just momentarily after this video. So please comment below or reach out to me at uh, brookspriceaction.com, which is Al's website, or you can just email me at brad.wolf48@gmail.com. I prefer, that is one method. The easiest way would be to comment below on the YouTube channel, and I'll probably for sure see it then. So yeah, I hope everyone enjoys this video. Thank you.